We have the numbers now with us that it looks like they intervene with about 3.5 trillion yen. Are they throwing good money after bad?
This is too good of a carry trade to give up on. That's the trader's perspective. As you said before, the fact that they spent almost already the whole amount they used back in 2022 shows that this is a market that really wants to buy this dip. And it will keep doing so as long as the Fed BOJ divergence stays intact. Now, it's one thing talking about, the Fed hiking or cutting rates. The real issue here is that the Bank of Japan is very, very slow in its tightening progress. Unless it goes on an aggressive hiking cycle, we would expect dollar yen to be bought on every single dip. And they're probably going to be using loads and loads of money and during illiquid hours, which is kind of a key issue here, because Monday, Japan was out on a holiday. They came in yesterday after the Fed when liquidity was again low. There's talk among traders that they're going to do it again Friday or Monday when we have the Golden Week holidays in Japan. And mind you, UK is closed Monday as well. The fact that they are coming during such liquid hours, to me, shows that they're not confident they can go against this market. It's very, very determined to buy the dip in dollar yen.
Well, here's the issue, isn't it? It provokes the narrative then, what more must the Bank of Japan do? But Vassilis, if I look back at Friday from the Bank of Japan, they're lowering their inflation guidance for this year and for next year. And the narrative is that they don't want to hike rates and be that aggressive, but they may well be left with no alternative unless there is tripartite intervention as intimated by the letter delivered by the Japanese, by the South Koreans, and by the Americans.
The Fed is the key here, yes. I mean, if you're a trader and you listen that the Fed is in the market selling dollar yen, you don't want to catch that falling knife. You'll just stay away from it. And that can be a big game changer. You can drop below 150 in a blink of an eye. I think, yes, unilateral intervention is what traders are not afraid of. If it gets more coordinated, then that's another story.
Vassilis, it's a scary prospect that the yen is perhaps tied to the fate of the Fed at this very moment because of what we heard yesterday. We heard a Fed that frankly has no idea when they're going to cut. They say they're not going to hike, but the direction and duration of how long we last where we are is so uncertain that we are so data dependent. Is that not this kind of action every single time we get a piece of U.S. data in that tells us something about what the Fed is going to do? Is that the kind of world we're living in with the yen?
Yes, it's true. It's true. We're very, very much data dependent across the FX space because, remember, it's very much dollar and Fed driven. Now we'll get the U.S. payrolls report tomorrow, and I believe that the Fed's focus has turned to the labor market more than the inflation front because, yes, the progress is not going as they hoped on the inflation path, but there is some progress. As long as the labor market stays robust, I don't think how the Fed can communicate a dovish turn. So yes, I think we're down to waiting every headline there, trying to find the next catalyst. Because if you look at the dollar traded weighted index as well, it's kind of like consolidating within a kind of a narrow range in the past 2 or 3 weeks. Because the market is waiting for that, we're waiting for data to signal if they're going to have to hit the bid or the offer in the dollar.